Hi everyone, this is Jason Barack of WallStForMainSt. I just wanted to do a short video today, guys. It's only going to be about 20 minutes or so, give or take, maybe a little bit longer or a little bit shorter. And what we're going to talk about today is some of the current events in the last week or so that are catching my eye. One of the main ones for precious metals is that Deutsche Bank admits it rigged gold prices, agrees to expose other manipulators. This was also first for silver, and then this is a subsequent gold story. I think, the douchebags over at Deutsche Bank, I think, now why are they snitching? I think they're starting to get worried, that things could really fall down on them, and they're looking for maybe the best deal first where they can pay fines and things like that. But one of the shoes to drop another one is that we're seeing major class action lawsuits filed. This first one was in Canada against the Bank of Nova Scotia for conspiring to manipulate gold and silver prices. But it's really interesting that no major U.S. investment bank like JP Morgan or Citigroup has been named yet. But I think we're going to see a lot more class action suits filed in countries like the United States against these larger other investment banks and also ones in Europe. And the reason is because, Deutsche Bank has agreed not only to testify against other banks and pay fines and things like that, and also, they're going to probably settle in lawsuits, but they're also going to be turning over mountains of evidence. So instant messages between traders, emails between investment bankers of one bank and another. And I think, this evidence, unexpected things may come out. But I want to just congratulate GATA, the Gold Antitrust Action Committee. They've been around 15 or 20 years, I think even before the internet. They ran an ad in the Wall Street Journal about gold price manipulation in the late 90s. These guys have been documenting the manipulation in gold and silver and central bank intervention and so many other things for many years now. And a lot of people laughed at them, and now look what's come out. So this was the big story that Rob Kirby was hinting at. I emailed Rob Kirby, and I got confirmation of this about the Deutsche Bank news. So I think, obviously these websites like King World News and some of the others are going to be trumpeting, we're going to have $50 silver in a matter of months or 6 months or something like that, or triple-digit silver within a year. I don't know if we're going to get crazy spikes like that, but I think, news about this manipulation and it going a little bit more mainstream, even though the mainstream media hasn't covered it, but people, even mainstream people now are paying attention to Zero Hedge on Twitter and their website and things like that. But I think now that more people are aware of this, I think it's going to put a bottom into the gold and silver market of sorts, and it's going to be harder for the manipulators to knock the price down rapidly and continually keep doing that, especially in this environment where there's so many problems and so many different economies in the global economy with China and Japan, Europe, the United States, etc. So if you don't have full positions in gold and silver stocks, if you don't have all the metal, physical gold and silver accumulate, on dips, I think you guys should probably be looking to be accumulated if you don't think you have enough exposure. People should obviously still have cash and for opportunity in case asset markets do crash, and cash outside of the banking system, because, there's been bailouts in Austria and bail-ins in Austria and things like that. And the people in power do want to implement some type of global wealth tax and cashless society and things. So I think people should be aware of this. I think BitGold too is a good way for people to have some physical gold outside of the regular banking system. I want to move on to the next story that I've been noticing. It's a stronger Japanese yen. I think it's very important. The global yen carry trade has been used to really drive up asset prices all over the globe. And that's where, these hedge funds and these investment banks and these private equity guys and these other billionaires borrow yen cheaply from the Japanese central bank and other Japanese banks, and they invest it in other asset markets all over the globe. Well, the Japanese central bank announced negative interest rates, and they're trying to drastically devalue the yen. And that's what the Keynesian central banking textbooks say should happen. And yet it didn't happen. And yet the yen has gotten quite a bit stronger recently, despite the policies that Japanese central bank has done. What I think this means, guys, is that these asset markets are starting to really top. And a lot of the smarter money, the larger players, the larger leveraged hedge funds and things like that, they're closing out these these yen carry trade positions, and they're going to cash. So a lot of these Asian trading markets, they were using a lot of the liquidity from the cheap Japanese yen to invest in other markets, and I think they've been going to cash in Japanese yen and then maybe converting it to other currencies and things like that. So I think this is another signal that the global economy is slowing down even further and or collapsing, and there's plenty of evidence of that, whether it's global container ships or trucking in the US dropping so much, and so many other different statistics that the global economy is not doing well. So I think a stronger Japanese yen, obviously long term I don't think the yen is going to, because the Japanese economy has so many problems. I think the yen may temporarily strengthen for a little bit, and then people may panic and things like that, and then the yen may collapse and start drastically devaluing. But I mean, the yen is temporarily strengthening, and that's hurting the real Japanese economy. And I think it's signaling that asset markets, are running out of liquidity. That central banks are slowing down the amount of liquidity maybe going into asset markets and things like that. There's a story on our WallStForMainSt Facebook fan page about this is the beginning of the end of central bank easing from a Bank of America official on Bloomberg here. Subscribe to our fan page if you haven't already done so. It's up here, WallStForMainSt. But anyway, though, guys, it's just funny. You mean they're going to let the real economy and asset prices collapse? See, I don't know about that. We'll see if they actually do let it go. Maybe their plan is to short it and then buy up assets again on the cheap, like was done in 2008 and 2009, before they started drastically refueling asset prices with $19 trillion in cash and cheap debt and things like that. There's been more than $19 trillion printed since 2008. Anyways, though, guys, we have the oil price that's had a little bit of a rally, but Jim Cramer is still recommending oil stocks right before they go bankrupt. I guess, old dogs don't learn new tricks. Jim Cramer did this during the 2007-2008 banking crisis with subprime in the housing markets as Bear Stearns was collapsing. Jim Cramer was recommending it. There's video out there of it. Be careful of Jim Cramer's picks. He's not exactly the best stock picker. Who knows how much money he's getting bribed or whatever. He's getting rich, though. He's getting millions of dollars to be like a clown on CNBC. He is a smart guy, but I mean, obviously, I think he's corrupt morally. I think there's some problems there. He could have easily gone in. He recommended Energy 21 was the latest oil stock, and also the Sun Edison, the solar company. He could have easily went in there and read the annual report and looked at their debt situations and seen when the debt was due and things like that, and that their cash flow had fallen. So I don't know why he didn't do that and why he was still recommending them, but it is what it is, guys. Peabody Coal just filed for bankruptcy recently. I think this week they filed Chapter 11. A couple years ago, I was up in Toronto. Sprott flew me up there, and the Sprott office guys were telling me that coal had bottomed already. I think it was September 2014. I was like, no, I don't want any exposure. I was in front of Eric Sprott and some of these other money managers and chief investment officers over at Sprott, telling them that, no, you don't want any exposure to coal right now. You want to wait a couple years. You want the bankruptcies to already start happening. I was like, yeah, the coal price has fallen a lot. It had in 2014. I was like, these politicians want to drastically reduce demand. They're hardcore environmentalists. There's no free market in the energy markets. And they were telling me, the coal markets have been down for X number of years already, and we think they bottomed. And I was like, no. You need to see the bankruptcies first. There needs to be more blood on the streets. So they were early, and it's just funny, though, that people who have more experience than me, they definitely haven't read more books than me. But, now I almost have 10 years of market experience, guys. I've been doing this since 2007. So I'm not this young kid anymore. I'm 33 years old, and I have basically 10 years of market experience, reading over 400 books and speaking, with great contacts and learning in so many different ways. There is going to be a point, maybe in the longer term, where coal, after all these bankruptcies, where there will be some investment opportunities in coal, although, coal is very not environmentally friendly. It's like the worst polluter out of all of them. But I think, the one point I want to make is there is no free market in energy for the most part. There's so much central planning and regulation, and, we have all these subsidies in the United States with energy packages, whether it's the corrupt Democrats, giving these corn farmers corn ethanol subsidies in Iowa, or, giving Solyndra money and things like that, or Sun Edison, which I think in California, which is about to go bankrupt or have already gone bankrupt. A lot of these wind and solar guys got ridiculous subsidies, and yes, they could say that the oil companies got subsidies too for a long time, but, no one should get a subsidy. Okay, it's just ridiculous. But, you know, we got to a point here in the free market where there was a little bit of free market forces besides just a stupid central planning in energy, where the natural gas price in the U.S. got cheap enough to where there wasn't much need for the coal-fired power plants in the U.S. because natural gas was cleaner and it was cheaper, and a lot of these power plants just switched over to natural gas. So free markets do work, guys. You know, a lot of the communists and Democrats and environmentalists will say they don't, and, you know, things like that. But, you know, if you let the water price go high enough temporarily, we could easily make clean water and improve desalination technology and so many other things. There's a liquid fluoride molten salt thorium reactor, which was blocked by governments for decades, and the big nuclear energy industrial complex of like the uranium light water reactors. So there's been so many good alternative energy technologies that have been blocked. And, you know, it's just very frustrating. We've had the emergency Fed meeting here in April. I wonder if it was about interest rates or about asset markets falling, or maybe it was the Deutsche Bank effect here of gold and silver. You know, we'll have to wait and see what happens in the upcoming months to see exactly what happens. But if you guys enjoyed this video, please donate to Wall Street for Main Street. Here's our main website. You can just go right here and you can either donate Bitcoins or donate with PayPal to us. I think we'll set up a BitGold one too, so you guys can also do that. We don't have the BitGold donation thing set up yet. We could use that. We could also really use, guys, the 5-star iTunes reviews. We have 23 of them now, so thank you. The other 2 or 3 people who did it. We were at 21 a month or so ago. We're up to 23 now. And I had a really positive meeting yesterday. I want to give you guys an update on our educational technology company progress with virtual classrooms and live chats. I don't want to talk too much about our business model, but we had a meeting with a very talented angel investor. He's a successful business person. He didn't give me permission to name his name, but he's been on our podcast before. A really good guy. I respect him a lot. And we were up there in New York City. We weren't up there in New York City, but we were, you know, doing a conference call with him up there in New York City. And he says he loves our long-term business plan to build a new type of next-generation educational technology company, but that, you know, we need to bring in a more experienced CEO to help raise capital and execute the business plan and fill in all the things we may have missed on the business plan or adapt to maybe changing market conditions. So Modawood and I are looking to bring on, with equity and help us raise more capital, someone with more experience in business, someone who has experience raising capital, someone who has run a day-to-day business more, you know, 7 or 8 figure business, or been involved in upper management there more, and they would get equity. And, you know, if they help raise us capital, they would get a pretty good salary going forward, and we can turn this into a 7-figure a year business, or at least investors and other people have shown. And Modawood and I believe that once we have the investment done to build the type of software we need and things like that, we can turn this into a 7-figure a year educational technology company hybrid. So thanks again for watching this, guys. There's a lot of crazy things going on behind the scenes. Thanks to GATA for the last 15 years for doing all the work they've done, and that's in spite of, you know, being made fun of and laughed at and name-called by all the douchebags and assholes on Twitter and on Wall Street, and the Keynesians and, you know, the Marxists and things like that are anti-free market and say, oh, no, market's manipulated. You know, we're being proved the truth that basically every market's manipulated. You know, interest rates, currencies, they're manipulated up or down to the powers that be, and there's just so much bullshit central planning in the world. You gotta protect yourself, and you're gonna have to pay attention to markets more. The old days of buy and hold, set it and forget it. Unless you're in a really good company that's small and growing free cash flow and things like that, and is eventually going to pay dividends, maybe your own business and things like that. Other than that, guys, buy and hold for the most part is pretty much dead because of all the rules changes coming in cashless society, and how governments are eventually, you know, they're looking at coordinating and creating a global wealth tax. So my throat is getting dry, my lips are getting parched, and I'm gonna sign off on this video. But I think it's really funny that Deutsche Bank, guys, has now become a snitch.